What's going on, everybody? It's your boy C-Zar, and we are talking about Hedera today, HBAR. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. It is the 10th day of January. Here we are sitting at about 11.8 cents with 1 day, 6 hours left in this week, about 5.5 hours left in this day. Here we are. We have pulled down. I actually want to zoom out real quick. Hold on. We've been in a downtrend for quite some time. Clearly here, right? We've made a move up over the past week and now have pulled back, finding support at prior resistance here. Hopefully, this prevails. HBAR, in comparison to stellar lumens, XLM, they've been very, what's the word I want to use? Similar. They've been very, very symmetrical in their movements. But XLM, over the past couple months, since November 21st, since this low point here, it's basically tied up with that low right now. It's like it's moved sideways this whole time. Whereas HBAR has so slightly, it's actually just found resistance at that point and now rejected back down. So it's a little bit lagging behind. There's a couple of ways that you can think about this, right? The first way is that, okay, well, it's lagging behind because stellar lumens is better. Maybe that's true. Or HBAR has a lower market cap. It's got less liquidity. It's easier to move the price around, and therefore maybe it's on a discount. And this coin that does have a lower market cap between the two, I know they're very similar competitors in this crypto ecosystem, but the one that has the lower market cap that also, relatively speaking, is at more of a discount over the past couple of months, I think this is the better buying opportunity. Not financial advice, not a financial advisor. Do whatever you want. I think they're both great. You're both finding support at prior resistance. They're very similar to each other. I just think this one overall is at more of a discount. And it's also got a lower market cap, so it has more potential for growth, but we'll see. Looking at this here, looking at the short-term stuff on the 1 hour time frame, we did have a lot of volume come in at the lows, which is nice. At the lows, not coming down to the lows, but at the lows, we had a lot of volume. We're selling off now. It's like you're breaking out almost, but there's no volume at all coming in. So I've been theorizing this with a bunch of different cryptos, and I guess I'm going to theorize it with this one too. We could see a fake out to the downside, and then we come back up. I'm kind of calling for it at this point, because I don't expect that we're going to break out and go lower. I do expect that we're going to move up, but just with the way it looks, I wouldn't be surprised if we saw a little fake out first to do that, right? It looks like we want to go down. Let's confirm the bias, and then as soon as we get people trapped in their confirmation, boom, that's when we rally. It's like here, right? Here, I guess you don't have bearish divergence in all fairness. You have a little bit of bearish divergence on your stochastics there. Let's see. There's bearish divergence on your MACD, whatever. You do have bearish divergence between these 2 points in your RSI. Here, it seems as though it's obvious that we're going to go lower. But first, what you had to do was you had to take out that high. You saw a fake out, and then you moved lower, right? Or even here, relatively speaking, we were moving flat. Look at that. We had a little fake out, then we moved higher. Exactly the same process. That's exactly what I'm expecting. Even here, you had a flat base, and you broke just below that base. That's when you started to move higher. I mean, we could go back in time and find that this is typically what happens. Find a range, look at the range, and just try to be very simple-minded with this, as if you're a novice for the first time ever looking at a chart, because 90% of the people who are investing are, okay? And maybe it's not the first time, but they haven't taken the time to analyze it. It's very obvious that, up here, good. Just below this line, bad. And the market makers know this, and the algorithms know this. And as soon as it goes down here, people go max short, they sell their positions, they whatever, and then we rip. It's that last little grab of liquidity before we move up, and I wouldn't be surprised at all if we got that. The 1 hour RSI is very neutral, slightly bearish. The stochastics are bearish at the moment. The MACD sure is bearish as well, but I don't really care. You're moving sideways. These indicators aren't as reliable. It's the 1 hour time frame. Tomorrow comes along and it's a different story. Or maybe it's the same old story, but I do assume that we will see a little slippage here and we'll probably move up higher. I actually do want to look and see where we are relative to this fib here, from a relative low here to the relative high. Yeah, golden ratio. So we'll do a little bit more than just a little slip, right? We're probably going to go down to the golden ratio, down at about 11.6 to 11.4 cents. We're at 11.8 cents now, so nothing dramatic. Find support there and then move up. Easy peasy. We found a lot of resistance in this golden ratio zone right here. We found a lot of resistance back there. We're just going to find support on it now. It's not that hard. It's a higher low overall. It should be fine. 4 hour RSI, while it is in a rather bearish posturing here, down at these levels, overall you're very bullish, right? You went from getting oversold consistently to dipping your toes and rejecting it, and then you got overbought consistently. Now you're not even getting oversold. Do you see how the momentum is shifting upwards, right? It is clearly shifting upwards. And maybe we slip a little bit from here. But I do expect that we won't get oversold, and I do expect that we will get overbought. And when we get overbought, that should result in a breakout above this area here. If we're talking about a breakout above this area, I don't really know where the appropriate fib to draw would be. Would it be from this high? Is this high to low relevant? Maybe to some degree. But I feel like the kind of most obvious fib to go for is the actual high over here. We hit the 236, nice. Okay, come back, find support at prior resistance. That's what we're doing. When we move up, we should move up to the 382. And that makes sense. A little bit of an A, B, C, D, maybe E pattern all the way up. Maybe it's a 5-legged impulsive wave to the golden ratio zone. In which case, not a financial advisor, it doesn't have to happen in this kind of time frame, but perhaps by the end of the month of January, we're at 20 to 22 cents again. We're at 11.8 cents now. That's phenomenal. Like, it's the 10th of January right now. We have 2/3 left of this month to go, and we could very well be up about 100% from here. Maybe like 90%, 80%, but still pretty phenomenal. I wouldn't be surprised if inevitably this is where we're making our way. Resistance here, support right here. This zone is clearly significant, and it's the golden ratio zone on top of that. But first and foremost, we likely don't just teleport there. There will likely be paths, steps ahead, and the next step, we found resistance here at prior support. The next step might be to find resistance at prior resistance and prior support here at the 382. Consolidate, do your thing, and then rally up there. I would expect that by the end of January, if not the first week, first 10 days of February, we're probably up at this 20 to 22 cent area. If I'm wrong, it's only because we did it faster than expected, not because we went down and now we're in a bear market. I mean, that could happen too. Just statistically speaking, we're more probable to make this happen faster than we are to die in a bear market. Neither of those are the likely outcome. The most likely outcome is that we stair-step our way up to this area, again, by the end of the month or the first week of February, but I digress. I've already said that enough times in a bunch of different ways. Somebody asked why I repeat myself so much, and it's like, if you notice, I hope at least, when I do repeat myself, I'm phrasing it in a similar way but with different words, because I've come to find in my many years on this planet that you can say a sentence and somebody, actually you can say the same sentence to 10 people and you can walk away giving 10 different definitions of your sentence, right? So I explain it in like 3 or 4 different ways so that the whole composition of how I'm explaining it, it's the same thing each time, just explained with slightly different words. Hopefully there's less room for confusion. That's the whole reason why I do it. Trust me, I'm not a fan of repeating myself either. I get bored of it too, but it's just part of the process. At least it's part of my process. It's how I talk. 11.8 cents. Enough about me. Let's talk about you. Daily RSI is back at the 50. You rejected your overbought zone. That's a pretty powerful signal. You didn't really do much with it. I mean, for comparison's sake, the last time that you rejected your overbought zone was here. From a high point to a low point, about 1, 2, 3, 4, 5, 6 days later, you dropped 26%. From a high point here, 1, 2, 3, 4, 5 days later, hasn't been a full 6 days, but we're only down about 12%, right? I mean, unless we drop 10% more tomorrow, it's not really comparable at all. It's literally like half the damage from the same results, right? But the difference here is, here we were building down, right? Here we're building up. So the next attempt is probably going to take us to the overbought zone. Again, that should break us out and send us to higher prices. 20 cents, 21.7 cents, that's the area that we're targeting. MACD wants to cross above the zero line. That's bullish. The last time we did that, that correlated with this move here. The stochastics are at the 50. We like to bounce here. We've bounced here plenty of times, both as support and resistance here and support there. Plenty of times. I think that we are at a low point. We might go just a little bit lower, and do not panic, my friends. Do not fear at all if we go below these lows here. In fact, I would count on it. I would very much expect that we do go below 11.777 cents. But for a moment, and not that far away from it. I do doubt that we go below like 11.5 cents, 11.4 cents. I doubt that we go too much below there at all. Hit the like button, subscribe. Thank you all for being here. I guess actually I do want to say one more thing before we go. Let's see. Bouncing off the oversold zone. The weekly indicators look reset. They're not in the most bullish posturing right now, but they are reset, that's for sure. We're at the base of this range overall, finding support at prior resistance here. My thoughts are that whenever the time comes, whenever we are moving back up, that we will inevitably see new all-time highs and achieve prices that are at 55 cents, 80 cents. Once we're done with 80 cents, we will then move on to $1 to potentially $2.50. And by the end of the cycle, I wouldn't be surprised at all if HBAR saw prices that are above $10 or at least somewhere thereabouts. I've got nothing else. Hit the like button, subscribe. Thank you all for being here. Take care. Bye-bye.